What is your problem, young one? You've been slipping yourself. You had the click, and the click slipped throughout your fingers. How can you do that? The only way you could keep the click from not slipping out your hand is to write it down. Because what happens, you're gonna forget little pieces that initiates you from getting that click because you was doing the step correctly. And over time, you start probably doubting yourself and you start probably tweaking it a little bit. This is probably why we're having this call right now. We're trying to slap back that click in your face.
Yes, sir.
So what's like the little problem you've seen though?
Just right now, it feels like my eyes and my head is just blurry. You know.
What do you tend to see when you're trading? Are you taking more L's or are you taking like break evens, or is it not mostly going your way?
It's been L's all day, and it doesn't even stop me out and then goes my way. It just completely does not go my way.
Exactly. So that means your problem is not the pattern. Your problem is your direction.
Yeah.
You're finding the wrong direction. That means your step number one is getting fucked up. You're not finding your higher time frame liquidity correctly. Or you're not reading price action correctly. So I'm gonna run through the steps again so you can see it and compare it to how you see it. Okay. So let's just take Euro USD for example. What trade did you take to this week anyways?
AU.
You took longs?
I took longs, yeah.
All right, you probably took longs all the way up here and you got stopped out. All right. So look, on AU now, if we're looking at price action, simple price action, market, if we take the swing lows and swing highs and we connect the dots, market is obviously giving us high highs, high lows, okay?
Mm-hmm.
We're not looking at the trend. We're looking at the impulses. So market is making new higher highs, right? Why is it most likely to do when it makes new higher highs? Pull back.
Pull back, yeah.
Exactly. When it pulls back, this is when you say you are currently in a downtrend. You see? And when you zoom back also, let's go on a monthly time frame. Not only that, we have structure showing that is in a downtrend. When we're labeling off the swing highs, this is a swing high, right?
Yeah.
Let's put it right here. This is a monthly swing high. What is above these swing highs?
Stop losses.
Exactly. So we're going to put a money sign right here. You need to annotate. Once you understand that this is money, what are you trying to look for once money is above there?
Liquidity, it's entries.
Okay, but what happens? What's the next step? You find liquidity. What's the next step? When price comes inside, what's the next step?
Then I drop down to my lower time frames.
Okay.
Pattern.
And what's the pattern? Okay, that's it. You want to see these highs getting taken out and the bottom getting taken out. All right. Let's go down to the small time frame. So we have market making new higher highs. We have market going at the top, but we need, if we want this pattern to work, we need this to get taken out all the way down here. And we know for sure that's super low. So it's going to take some days to get all the way down here. So that means we could actually trade from all here all the way down here. So this is not a clear picture. We want a clear picture that shows us the pattern somewhere above in here, above that red line, which is where the money is at. Simple. We drop down to a small time frame. Now we're seeing it a little bit better. But the only high that we see is this swing high. See? And the next swing low is right here. But we could go down to a smaller time frame to fix that now. Right here now. See, market made new highs, and now it took this out. So this is this is the raid, the stop hunts, the people who's getting stopped out, stop hunts. This is the break of structure. And now we're looking for supply, the correct supplies that's taken out, that took out this demand, this opposing level, which is, this is nasty, but these here, and also this at the top. Price didn't come at the one at the top. Price came at the one that's right there. See?
Right.
If we drop down to a smaller time frame, we could look for a better one. Breaker structure. So the next breaker structure now, this was the 1 hour breaker structure, right? But that doesn't mean we can't the smaller time frame is gonna give us a faster one, which is this one right here. This breaker structure right here. See? Which one broke this breaker structure? This area. And now you can see it right here. Let me just draw it out for you. This high, it's low, made new higher highs, pull back into this area. That's a pattern, and it took out this low. Starts going down. So once it starts dropping down, and this confirmation shows you, when you scroll back, anything that you think that is a demand zone that's here or here or here, all of this is gonna get taken out because it doesn't matter anymore. The trade that you're observing is this. We are in a current trend because first of all, we took out stop hunts, stop losses at the top, and now we need to look for the next stop hunt, and the stop hunt is all the way down here, and anything it's in the middle is going to get taken out. So your main focus is to look for the patterns that's happening here, all in here, okay?
Got you.
And it's the same thing happens over and over again because the reason why I took sells on GU is the same thing. Let me show you. GU is the same thing. Why did I take sells? It's because on a daily time frame, market made new higher highs, and I took sells late. I took sells in here. I didn't need to take sells up here. All I needed to know first is, are we pointing down still? Yes, but how do I know this? I have to mark out the liquidity area. See, all of this was a liquidity area. It's a huge liquidity area, but it is still a liquidity area. Market is still in an uptrend. It needs to retrace to where? Most likely at this demand zone or at these lows, but it needs to take out liquidity before flying up. So that's why I wasn't scared for it to fly up out of nowhere. Okay. Market took out this high. All right. I dropped down to a smaller time frame. I want to see a better area. I'm not seeing anything in here. I know it's down, so I'm not focusing on anything that's here. I'm not looking at none of this. I'm not looking at none of this. All these, if I'm looking at it, I'm anticipating it to get taken out. Look, the first time it got taken out, people had demand here. Second time, people got taken out. Look, this is why I pulled back up. You see, this one most likely can get taken out also. Boom, right here. All of this is liquidity, giving me proof so I should sell because this is what I'm looking at. If I'm selling now, I want to see swing highs. I want to see double tops. See double tops. Why? They have stop losses above here. This is an area for me to enter. If it goes up and it shows me my pattern on a smaller time frame, right? All right, let's do that. I go down on a smaller time frame. I need to look at swing highs. Oh, look, there's a bunch of nice swing highs. There's one here. Oh, there's a double top right here. Look, 1, 2. There's another swing high right here. There's another swing high right here. There's another good swing high right here. There's another one right here. So market needs to go through all these swing highs. All right, well, I'm going to keep my eyes on the strongest one. The strongest one right now that I'm looking at is the ones that's looking like a double top. See? Now, when I drop down to the smaller time frame, in the small time frame inside of here, this rectangle that I'm looking at, I need to look at what I'm looking for?
Pattern.
The pattern. Boom. So let's look. Let's highlight this and let's look for the pattern and tell me if you see the pattern. Right now, you're not seeing the pattern because it's hard to see that on this time frame. This is why I say drop down to the clearest picture, the ones that has a nice V shape for you to see the pattern. Okay. Let's drop down to the smaller one. The smaller pattern, the smaller time frame is, let's go on the 15-minute instead. All right. Now look, we made new highs inside of this double, the double top line, right? The area of liquidity, right? And if we plot out the impulses, swing high and swing low is the same thing. This is a swing high because the two candles on the side is lower. This is a swing low because the two candles on the side is lower. This is a swing high. Uh-oh. And now I'm waiting for this to get taken out. And it got taken out. See? This is a pattern.
So even if it's by like half a pip, it's taken out, taken out.
Yep. It doesn't matter by 1 pip, by just half a pip, by 0.001 pip. It is still good. On this time frame, you can't really see it, the retracement so well. So if you can't see it so well, let's go on a clearest picture on a 5-minute. Now you see it. Look, we're above the area where liquidity is at. Market stopped out people from the highest point because there's people who were selling before quicker. They were the first one selling, so they needed to get kicked out, right? They got kicked out. Our eyes needs to go straight to the area that took out these people, which is the swing low right here. And if we zoom in a little bit closer and be really specific with it, like really accurate detail with it, this is it. It got taken out by the pip right here. Boom. Stop hunts. So this is your first step. You want to see stop hunts getting taken out. They got taken out. Once these stop hunts gets taken out, you want to immediately go down and look for the opposing zone, the opposing demand, the opposing liquidity down here. They get taken out. Once this get taken out, you're looking at the cleanest supply or AKA return to the origin or just supply that's going to be your entry. Well, this is a drop, a base, and a drop, right? And once everything is clear, this is how it's going to look like. Your entry is the green right here. Oh, that's too green. The entry is right here. Stop loss above. So your reward, your risk is this. And your reward is even greater. That's it. That's it. And what you're aiming for, you're either aiming for the RR you're looking at, or you're looking at the next area of liquidity that it needs to run to, which is these double bottoms right down here. And that could have been your quick trade right here. See? That's it. And I was taking sells because I knew that market was just dropping. Most likely, I feel like it's going to drop even more. But this is it. This is it. I started on the high time frame. I started off on the daily, reading price action, right? I was already late taking sells up here, but I know market was dropping. So I needed to know at an area first. I needed to know where is it going first. And when I know where it's going, I just put a line. I just put a simple line. Why am I putting it there? It's not a swing low. The ultimate swing low I wanted to come to is down here. But I need to be careful here because we're still in an uptrend and this is demand. See? Yeah. And mostly demand, when it gets taken out, it could swing up. So I'm going to put a little line here. But in actuality, this is how most supply and demand traders are looking at first. Remember, we only use supply and demand when we want to enter the market. All right? So I have this line and that line right down here. And these lines is just to tell me like, yo, it's coming to these areas because I'm looking at it as a magnet. All right. So when I drop down to the smaller time frame to all the way like down to the smaller time frame and I zoom back, you see, I scroll back. I know this line is still there. You see what I'm saying? So my eyes are not looking at the left side anymore. My eyes are not looking here. My eyes are looking at only this right here, this line. So I just put a little dollar sign just in case to be like, okay, this is where I wanted to come to, or I put a magnet. And what I'm going to do, my eyes is going to go straight to any type of nice liquidity, opposing liquidity area. All right. So I could take sales from. And that was the only nearest one I seen. And this is why I took sales up here and all in here. See, when I was taking sales all in here, don't get it wrong. Like I didn't have tight stop loss. My stop loss was getting wider and wider because still I needed to put my stop loss above here. See, right. Still I have to put my stop loss above here. Still I had to put my stop loss above here. But it doesn't matter because if I'm already in profit from the big one up here, right? And I have this one like this, and this is like a 1 to 3, and then this is like a 1 to 2, and this is like a 1 to 1. It doesn't really matter for me because that 1 to 1, 1 to 2 adds up as a 3R. And then I have 5R. And then this one is like a 8R. And all together is like 15 Rs. You see? I didn't need to go to different trades and just have like one trade that's a 1 to 15. I could have had multiple ones. But that's if you really are good with risk management though. You see? Because my max percentage was not, I trade 5% for max. The first one was already at break even. So it's like nothing happened. And this one, I had to take the trade. I took 5% off of this trade. Once it broke a certain level, I moved my trade not in profit. I cut my trade in half. So that means I have 2.5% left to play with. The next trade, I used a 2.5%. So it still adds up to 5%. You see, my max percentage would always be 5%. I'm managing it to be around 5% at all times. Yeah. So that it takes time to do that. You have to be quick with it also because you have to type in everything. It gets crazy. But yeah. So your turn.
All right.
Share your screen.
Says you gotta enable the share screen.
Uh-oh. Let me see. Make host. There you go.
I got it. Any chart you want me to look at specific or?
No, I want to see how you break it down so I could correct you.
All right. So you're into the evil, so I'm trying to throw on gold, I guess.
Anything works.
I mean, I start like on the monthly, weekly, things like that, just to get like an idea of like the higher highs, higher lows.
Just if you start on the highest time frame, it just makes it easier for you because you have less candle to work with. That's why I say start on the high time frame because it could be good for beginners. Once you have a lot of candles, you have a lot of highs, you know, so it's hard to pinpoint which one is the best one. What happens when you're high time frame just accumulates everything that you need to look at.
You get lost.
Exactly. I try to have people not get lost.
Because like when I was looking at gold, I remember we broke through this all-time high right here.
Correct.
So I marked that off.
So what does that mean?
Well, right now this was a liquidity area, and all stop losses are up here.
Correct.
But where I get confused, this dates back to 2011.
Doesn't matter.
Still be up here.
Of course, the older it is, the harder the older it is, the stronger it is. Keep that in mind. Write that always down. The older it is, the stronger it is. So that means if you have a double top that's old, not only that the double top is strong, but it's a double top that is actually old. It's equal highs. You have equal highs. It's just like more added. What you're doing, you're just assessing that a lot of people have their stop loss above. You know, a lot of retail traders are trading that. That's all you're doing.
Okay.
Right.
And I'll come down, like if it's Monday, I'll check out the weekly, see how we're doing.
So first of all, double click this. Double click this. Because you have your chart stretched out. No, just double click it, like on left click it, yeah. All right, now use your scroll in. Yeah, scroll in. Yeah, that's better.
All right.
Wait, next thing. Click this right here.
Gotcha.
And put minus 75. All right. Let me see how it looks. Put 80. Probably your resolution on your laptop. Put 80 instead. Let's see.
Nah, it's old, yeah.
All right, so it should be. Okay. I'm trying to get enough candles in one screen for you when you drop down to the smaller time frame. All right, so weekly. There's nothing really on the weekly because you're looking for sells.
I mean, all I really saw is that it came up above here and it started pulling back down. That's pretty much it.
Mm-hmm.
It's just not clear. I'll go down to the daily. With the daily, I see it's kind of almost like in a downtrend. Like it made this lower low, made this lower high. So it's, right here, so it's consolidating to me. You know, it's not really doing much.
Mm-hmm.
But I would still mark off like the swing lows and swing highs just for like targets. And like how I change the color to tell me the time frame, stuff like that.
All right, so that helps, yeah. I feel like you have too many lines going through price. Like you see this line right there. I would have just had it right here and don't use the horizontal line, but use the, the trend line, so I could stop it right there from going through all of this. When you go in a small time frame, you're gonna just see a line just going through price.
Gotcha.
It might confuse you. Boom.
All right, so I guess like my question here, do we mark off all the relevant like swing highs and swing lows, or?
Well, you see, what are you looking for? You're looking for shorts or long?
Well, to me right now, we will be looking for shorts up until at least this swing
Exactly.
low, and maybe this one.
So that means you're looking for swing highs to confirm the raid. And then you're looking for the breaker structure. Like once you understand your bias, like this is it. Once you understand your bias, let's say your bias is down, the next step is to find the pattern. That's all.
Okay.
The raid, it doesn't matter what time frame, you just want to see the raid. Because what happens is that raid or stop horns allows you to assess that once it made new higher highs, when price makes new higher highs, it needs to retrace. Once it retraces, you now understand that on a small time frame, it's a downtrend. And now you're good to go to take a sells. But now if you take a sell, you're not worrying about all of this. You're trying to worry about the current one.
Gotcha.
You're trying to worry about the current one. You see, you're worrying about too much after that. Once you find the bias, you want to worry about the current trend.
Okay. So I mean, this swing high, how it got taken out, and this,
zoom in a little bit, scroll in a little bit. scroll in a little bit so you could just really be detail with your shit. All right.
I mean,
So if you know it's
this would be
going
a swing high.
exactly. So when this swing high gets like taken, like why do you need this top one? Because this is a swing high, but there's something that got taken out previously from that. See?
Okay, gotcha. Take that one out.
And use the magnet so it can help you get the real high of the price. Because when you drop down to the smaller time frame, it's gonna look distorted.
What's that?
Take the end of it, take the end of the dot, and put it right at the top.
Right at the top.
Yeah.
How do I move it? Because I don't really understand that magnet. I've never used it before.
Just hover above this one. Hover above that line. All right. Delete it. All right. Now take it back again. Take this. Now hover above that wick. Yes. Click Control and drag it aside. Control is gonna put it straight. Control. Is it Control or Shift? I think it's Shift. Yeah.
Shift.
Hold down Shift.
Oh yeah.
Yeah, and keeps it straight. And keeps it straight. All right. Now let it go. Now click again and let it go. Yeah.
All right.
That is your perfect line. Now what happens? You just concluded that this is a stop hunt, and in here you could. And in here, what are you looking at on a smaller time frame for?
For the pattern.
Exactly. Simple. So let's back to go down to the smaller time frame.
So would you jump to the 4 hour or to the 1 hour? Would you work your way down?
Like I would jump to the 1 hour because I kind of feel like we could work our way down, but when you start getting better, you just you understand like what time frame is like that. I just guess it, but sometimes I'll jump to the 1 hour and I'll be like, probably not. Let me go on the 4 hours. So you can work your way down.
All right.
See, like you see, I'll be like, there's no data.
Yeah, you can't really see much here.
Exactly. So I'll just drop down. See, like now we really don't have a lot of data, but the data we have is that this is a swing high and there's a raid inside a raid. You see?
Okay.
So now drop down again, but put this line now. $15 or $5, probably going to $5. Yeah, $5 most likely. Price moves so quick on gold. We can't go no more. Oh, right, we can.
Yeah, my company's a little laggy. It's old as hell.
Mines have too much data too. I gotta change mines. All right, that's it. Look, see, it took out these highs. It took out these highs. It took out this by a pip, and this is your area.
Yeah, right there.
Exactly. And then once it starts breaking all it down here, you now start focusing on the trend, and you just look for the same pattern when it starts dropping down, and you forget about everything left.
I'm sorry. This base drop. Would you take this in consideration?
Correct, because everything that's in here now is just sells. So now once your confirmation happens like this, and it shows you for sure it's dropping down, your eyes are now just looking at the current trend. So any kind of pattern that has a base drop and sells, you already know you want to take sells. But remember, you want to put your stop loss above the stop hunt at all time. So if there's no stop hunts here, your stop loss is not here. It has to be above because price can still go above and drop.
Gotcha.
All right, this is how you save yourself. That's it. Go on a 15-minute. And now scroll to the current price. All right. So we're gonna try to look for trades in here. See, look like the same thing now. See, we know it's a downtrend. We're focusing on the downtrend. Now we see you see equal highs. This is like a double top or a triple top. People have their stop loss above here. Look, stop hunts, stop hunts, break a structure, supply. See, entry, stop loss above. See what I'm saying? There's also stop hunts down here, right down here. But you see, it took it out, but I don't think price came back. You could check.
So like, all right. So we have this, for example, right here, and we want to find that stop hunt. So we find that supply zone.
Mm-hmm.
Like for me,
So
I would always be like on a higher time frame. So it'd be like big candles, but since like these small little candles,
yeah, it adds up. It adds up. All of this adds up. If it makes it easy for you, you can make a supply that line when the stop hunts happen, and it breaks a structure. You could take that line to the top as your area, your zone. If it's hard for you to see it on a small time frame, so you see this line, you use that line to the top as your zone, your supply zone. If it's hard for you to see it as the candles.
Gotcha. Yeah, because before I would use like a couple candles, and I'd probably be down here.
Yeah, you will probably look at this one thing, but you want to take the whole thing because this whole thing is like an order block. It's like a candle for me. I see it as this, and I see it as that.
Yeah, because when I back test, so I'll see a lot of times I'll have it up here, and the price will just come right under it.
Right under it, and then
it's drop. Yeah,
it leaves. Yeah. Oh yeah, look. You see? Oh, look at that.
It came. Yeah. See, so I would have missed out on that beautiful move because of the way I would have done it.
Yeah. So this time you don't do that. Like, I mean, there's different ways you could approach it. This is the high. This is the last candle that dropped, before low and drop. You could put a line right here and enter here. Like all of this is still a zone. You could put it like that. You could put it like this. You could put it like that. It doesn't matter. The only thing that matters is when you know that this is a stop hunt and market give you confirmation, you want to understand that even if you enter here, it doesn't matter. You are entering where all the smart money is at. All of this is smart money. All in here is smart money. There's millions of exactly. And the stop loss is the most important one that's up here. All in here is the smart money. There's some smart money that didn't get retrieved, which is at the extreme. These are the greedy motherfuckers that wants to get the best entries. And at the end of the day, it does the same thing. It does the pattern again inside of that zone. See if you want a better entry again in here.
How I always did it, I would put my pendings right below the bottom, the beginning of the zone.
Yeah, you could do that. You could honestly do that, but it's up to you to see if you want that big stop loss. You see?
Yeah. So I guess that's like it depends because like my R&R won't fully be there.
Exactly. So if your R is not fully there, now you have to wait for it to come in and then show you the pattern, which is in here. I mean, we could do it. Draw a zone right here. Well, just draw a line right here or a zone, up to you. Whichever way is better for you. And then let's highlight here to look for the zone. You're gonna get used to that. Because this is the best way to do it. Like you take a line, you put shift, and it puts you a straight line, gives you the right price, and now you know for sure you want to enter. It's like a snipe shot.
Gotcha. So we drop down.
Yeah, let's drop down. Probably the 3 minute, I'd say. But let's see. Yeah, look at that. Look at that beauty.
Yeah, perfect.
Look at the beauty.
Break a structure back up.
Break a structure right here. The swing high right here. The impulse right here. So that's the pattern. See how the pattern just happens over and over again? And instead of your stop loss being at the top, your stop loss is right here now. Because now this is the real stop hunts right here.
Okay.
See? So if you can't really see the the zone too well, just remember this is the high, this is a stop hunt, and you can start off your zone like this. If it's simple for you to look at it that way. It doesn't matter. It still comes back to the same thing. We all know that this is still supply. We all know the wick is still supply. We're just at the area, at the promised land. Though the main sauce is this. Is finding this at the right spot. This. Most people don't find this at the right spot. Most people find this when this is in. You see, when it's in an uptrend, they see this, and it's in a hard uptrend. You know what happens? This now. They're looking for sells right here because they see the stop hunt, they see the supply right here. But since it's in an uptrend, the market just took out these swing lows. And the real pattern happened right here. And what's going to happen? The price is going to fly up. And when you drop down to the smaller time frame, the real pattern happened down here. And they got lost in the sauce.
It happened to me sometime, confront.
Yeah, this is what happens. The game is just a puzzle. And the puzzle happens two ways. It's either like this or like that. And people making it so hard. Like, really, people just add more shit to it. Like, people really add more shit to it. Like, even if you are, let's just say you are, what you call this?
Like a wedge or
wedge, a wedge flag pattern trader, right? The whole purpose of this is understanding the bias. If your bias is down, right, and it's swing low, you could create a trading plan that, let's just say he found the bias just like how we do it, like with liquidity. But now this wedge pattern happens, he could find a way to know that this is a swing high, and it happens 3 times. 1, 2, 3, and on the third time, he's gonna place his sells right here. And on a wedge pattern, it's just gonna drop. The reason why it dropped is because the bias was on his side, and he understood on the third tap, it always drops, and that's the pattern. This is a statistic. See, but I don't have time for that because what I've been doing, and most of my life, I've been just studying this. So it makes no sense for me to do that, but I can do that. I could legitimately do a course on finding biases. And then what I'm going to do, I'm going to take like 5 patterns. And for each pattern, I study it and I come up with a new course every month. I could honestly do that and people will buy it. And it's going to work. It's because I just play with statistics. I have no time for that. It's like, if I have no life, I will do that. but you know, I don't, I should do that.
Man, we do this because we want a life.
Yeah, exactly. It's just a game, to be honest. It's just a game of biases. And I just want people to understand it's like, once you get this right, everything else after that gets right. And the reason why I choose this is because I seen statistic is 83%. This is like, I think 60 something. But if you master this and then you have this in your arsenal, I mean, that's fine, but I don't have time for that. Like right here. Like right here. You see? And if you knew like this was a high, something was a high. I don't know which high, but it could show you the liquidity and then it could just drop. Same thing here. You could look at it like this. See, but my eyes are not trained to look like this. My eyes are trained to look like this. So there's people whose eyes are trained to look at vertically. There's people eyes that's trained to look horizontally. You know, there's people eyes that's trained to look like this. My eyes is most likely like this.
No, I see the pattern all day long. Like that's all I see is the pattern many times over. Mm-hmm. It's just catching my bias.
Yeah, and you know it's that. So when you have a problem and you see the pattern, but it shoots like it just goes fucking like off, like it's not even good at all. It's not the pattern. You have to switch back to your head is the bias. And the bias is most likely looking at structure, understanding structure. Oh, it makes new highs. Ask yourself, what happens if it makes new highs? It most likely retraces. Try to look left to see if there's a swing high that I took out also. And then when you drop down to the smaller time frame, you understand that the places that you're going to start looking now is in a downtrend. And if you know it's in a downtrend, all the patterns that you're looking at is this. Boom.
Gotcha. Cause I keep getting like sometimes when I look at the charts, I look too far left. I look at too much info.
Yeah.
When, like you said, I gotta look at the current trend.
The current trend. The only time you want to look left is if you want to just put a simple line, bro. A simple line for liquidity. You're not looking all the way left to look for a zone. And if you are looking for a zone, like let's just say you're looking for a supply zone, remember that supply zone is not for you to enter. That supply zone is probably for is to give you a bias that like this is a supply zone, right? And you already know that you're looking for liquidity. That is just gonna help you to see that if price is inside that supply zone and it's close here, you're looking at it to get taken out up here before dropping down. If that is your higher time frame. Your higher time frame doesn't start with supplies, it starts with liquidity. And the reason why you're waiting for that supply to get taken out is because you know that that swing high right here is the real liquidity. This is why I don't put a zone no more. I just put a line because a zone could miss, you know, it could fuck up your whole analysis because you're so used to having a zone to enter, you know? So this is why I switched the zone from the high time frame to the smaller time frame, because you already know that once you have a zone, you want to enter into that.
No, like one of my notes right here from the old lessons is use 2 or more time frames for zones, a zone and a zone.
Yeah.
That's right in front of me. And so I'm always looking at that. I'm going to take it out right now.
Take it out. I mean, you could keep it, right? But instead of saying zone inside a zone for entry, I mean, just to enter, use that zone inside a zone for liquidity. You just do the opposite.
Right.
Just for liquidity, so you know it's a strong area where liquidity is resided at. So you have a zone here, you're just waiting for all of that to get taken out. So that means if you know that it needs to get up here, which is the money side, and all of this is just zones inside the zones, you know that you could just buy. It's gonna shoot hard. You see, it's in the zone, but you could buy because you still have that profit margin to get to that top.
Right.
See, now you use the same knowledge, but you just do the opposite now. The only reason why it was working before is because when it's inside in a zone and it's in a downtrend and it's a bias is down, now it's just gonna tap and go. But if your bias is wrong, oh shit, that shit it's gonna go against you.
Yeah, 100%.
Any more questions, or you want to try another pair?
Yeah, try one real quick.
Yeah, let's go. We could do that. We could do that for sure.
Let's try GJ, I guess. Go through. Yeah, I don't even look at GJ no more. I stick to AU and sometimes GU.
Yeah, you just need 2 to 3 pairs, that's all. And then you choose one pair you want to trade for the week.
Because sometimes what I do, like AU doesn't move during London. So I look at GU during London if I'm awake, but AU by New York time. So
New
that's
York,
what I'm really looking at. I keep getting how price moves.
Yeah, and you see, the more you stay with 2, you start figuring out like certain pieces. Like you would never know if you was looking at multiple pair, you would never know that AU was not moving on London session. You know, it is kind of obvious, but you know, like there's certain specific times that you're gonna notice that other people don't see.
Yeah, 100%. So for GJ, I see this. Try this one out. See the swing high right here.
Where?
That's that right.
Zoom in a little bit.
This swing high.
Mm-hmm.
Yeah, I get used to this.
Yeah, you got to, because that was gonna get you clean, more organized.
And so that has to take anything out. So I see this swing low here, and this was like a liquidity grab right down here. So I know the target is going to be up here. Minimum to this level since we're going up.
So the current trend is
it's up. So drop down to weekly. So right now, the weekly, it's not really too clear, but I'll still be looking only at this little area. I'm not gonna worry about nothing over here. Pretty grab. So if I'm on a daily, would I consider this swing high as like a liquidity grab?
Yeah, it
Even
was.
though my bias is up.
Yeah, I mean, even if it was up, right, and you was aiming for that, at the time you wouldn't like at the time when prices were around here, you would have a line right here, and that line would help you to take an entry right here to take for shorts. Because remember, you could take shorts in here once it shows you the pattern up here, and it did show you the pattern up here. But once it leaves like this, you don't need that anymore because most likely it's gonna continue up because all you did is this. You know it's going up here. And what happened, it had like a strong little move here. And what happens is that market used it for liquidity and then it dropped down and this liquidity is used already. So you don't need that anymore. And then it's going to use the next liquidity to continue up higher. All you did is you traded from here to up here, which can be 500 pips because this is the daily swing high. It's like a daily time frame.
Right.
See? And that's what I did. And then once it starts continuing up, you don't need this anymore. All you're looking at now is
down here.
Yeah, and you look for proper swing lows now to continue up. Because all it is putting the dots together, highs and lows.
Gotcha. So let's start seconds. This will be my next swing high.
Correct.
For a mini target.
To go up.
Switch it up. So from this point, if we're looking up, then I'd be looking for swing lows.
Correct. So now try to look for proper swing lows around here. Look for the proper swing lows. Because remember, if you're looking for swing lows and you know that needs to go up, you're trying to look for a pattern like this. You could look for the same pattern like this on a daily. Don't get it twisted. Because the more it's on a daily, the stronger it's gonna fly up.
Right. I see a swing low right.
That's been taken. Look at the swing low that's been taken also. Where?
This one right here is the doji thing.
There's one before that. Zoom in. You scroll back too much now. All right. Now take your time. Now look at it.
Swing low. I guess it'll be this one.
Look, nope. You're missing one.
No. This one.
There it is one. Yeah. That's it. You want to look for the one that got taken out. Shift. All right. Boom. So now the reason why you did that is because now you figured out that low right here that you just took, which I'm going to highlight in blue. This one right here is actually a swing low that got rated. So now the swing high that took it out was which one? Now you're looking at the swing high that it has to be somewhere up here. But you have to look at a swing high. Which one is the swing high?
This one right here.
Exactly. So now you have the pattern connecting together. You see? It's clear. Now that you know that, now you could tell that the next zone that most likely could come back to is this. So it could continue higher. You see?
Okay.
You put in a puzzle together. Because the only liquidity that you see is down here. But this liquidity is not liquidity, it's a stop hunt. See, if you miss these little ones, you wouldn't tell that this is a stop hunt. But if you get precise with it, you understand that this is a stop hunt and this was the liquidity. So that means the pattern is completed in a monthly uptrend. So the monthly is the trend and the daily is your entry. But you have to wait for it to come all the way down here. So that means once you understand that it needs to come all the way down here, now the current trend is down. See, this is why sometimes this is so it's crazy, because when you say it's an uptrend, you won't say the monthly is up, but after you don't say the daily is down, and people get confused. It's just that at the end of the day, what you're gonna have certain lines and zones that you'll understand, and then you'll understand that you want this to come down here to fly up. That's all. And you could trade this. You could trade this. Honestly, you could trade this downtrend. You could trade it down.
So I would drop down to like the hour time frame and look for liquidity
from
and
the upside.
Pattern.
Exactly.
To go down to this area.
Exactly. And just remember that the liquidity from the 1 hour is the liquidity on a smaller time frame for down, even if you're in an uptrend, is just low probability. But once it shows you the pattern, it's still a good trade. Because remember, if we're looking at this structure, market made new high highs. Like it's obvious market made new high highs. What do we expect?
Pull down.
Pull down. And all we're doing is now like we're solving a problem. The question is, where does it come down to? You see? Well, it needs to come down to the origin. So we answered everything. We answered where's it going to come down to here. They made new high highs going down. So where's the high low? The high low is around here. That's all we did. We still coming back to the basic. Up, high. Where's it coming to? Up, the origin, high or low. You see? People don't teach that. They think they don't really know where the high low is at. They don't understand that on the same time frame, there's a stop hunt, and this stop hunt has a zone, which is the origin.
So I'll throw out this zone. Okay, this is my daily zone.
Correct.
I don't take that.
Exactly, because if you was a daily swing trader, you would take that, and this is why you put that zone there.
So then I go down to the hour. Now I'm looking for
zoom back now, the pattern, and look, scroll in a little bit, and stop. Yeah. Look, now you know that this is the trend. This is the trend. All right. Okay. So starting from here, try to see how many patterns are you seeing like this. All you got to do is just put a line. Just put the line at the top. Just try to find this line, the best lines. And scroll in a little bit. Scroll in just a little bit so you can see a little bit. All right. Go ahead.
This is one right here. Damn. Let's get this right. The entry you want me to figure?
Yeah.
Okay. Yeah. So I'll be right up here.
So there's one here. Swing high. The pattern.
Yeah, that's what I was marking out. That was from my entry up there.
And there's the next one. Yeah, exactly. And the next one you had right there.
Okay, because it broke the structure, came back up.
Correct.
And then the next one be right here, because it broke this down here and it came back up. And right now what we're doing, it broke this, so it's putting back up into the zone right up here.
You're missing one.
Missing one.
You're not doing it too clean. You want to put it at the wick. You're trying to look for stop hunts. There's a stop hunt right here. A swing high, stop hunt, break a structure, pattern. This might be the pattern, or this can be the whole pattern right here. It's going to pull back somewhere inside here before dropping again.
Okay.
There's the next one right here. The zone, stop hunts, boom. See, this is a liquidity, but this is also liquidity. So you know for sure that it's a stop hunt. It broke structure. It's pulling back up to drop somewhere. All you know is that your stop loss is going to be here.
Yeah.
And it's
100%.
up to you now where you want to put your entry. That's all.
So I would go based off what you taught me. I would put it up here. Well,
Correct, and you could do that. You could also use a Fibonacci to like help you too. If you know the swing high and the swing low, if you like the 61.8 and you don't want to use the zone, you could put like 61.8 could be here, and you could create a plan that 61.8 is your entry after you see the pattern. You could do a lot. You could do a lot with this information and create your own shit.
right.
You do know that like you have a swing high, you know the confirmation happened, you don't like how the zone looking or anything. Well, you take the swing high, the swing low, and you choose a number of a retracement that you like, the 61.8, let's just say, and your 61.8 is always your entry. But people won't know that. People now would think that, oh, every swing high and swing low is 61.8. No, you do know that once a confirmation happens, 61.8 is your entry. That's it. And that's something special to you that no one knows. You could create special shit like this. All I did is create my stuff, and then I just gave it to you guys. That's all. And you guys could like tune it and do a lot of shit with it.
Hey, so quick question. Since this candle is technically the breaker structure, but how we have this wick up here, it came in. It looks like it came into the zone.
So that's a swing. That's a swing high. So that means you could wait for liquidity to get taken out here, and then boom.
Another entry. Okay.
Exactly.
So I mean, either way, it's almost the same entry then.
Correct. You have a swing high inside of that zone.
But then my stop loss would be up here instead.
If the pattern shows.
Right.
Correct.
Then it'll be even a better R&R.
If you want to put a pendant right there, your stop loss has to be there. But if you want to wait for a pattern, you'll have a better RR. Correct.
Okay, I mean, technically, I could do both as long as I'm under my risk management.
Correct. You could do both as long as your max exposure, just like I showed you just now there about max exposures, it's not above. That's it.
All right. Cause I use like 2 or 3% because of the funded stuff. Like it has got the max loss.
Just choose one number, not 2 or 3. Just one number. Remember that.
Actually, I got written down right in front of me. I use 2%. That way, I'm allowed 2 positions, like per day, so I don't go over.
Bet. That's good. Any more questions, or you feel you good now with the tuning? You liked it?
No, it was fire. It was great. I feel reinvigorated.
Yeah, no problem, bro. That'll help you a lot. Just remember, when your shit goes all off, just try to fix your bias, okay?
Okay.
All right, bro.
I appreciate you, Kimo.
No problem, bro. I think I recorded this, so I'm gonna send you the video so you can look at it again, so you don't forget.
All right, for sure.
All right.
Sounds good. Thank you,
bro. No problem, boy.
Have a good weekend, man.
You too, bro.